First of all, I just want to welcome some of you that's joining us today for the first time from FX Street, and I'm just going to give you a very brief idea of how we do our trading and our trade planning session, so that you can capitalize on the settings and the signals for next week. What we try to do, we try to identify a price point, a decision making point, and let's say like in this chart here on the dollar yen, let's say the 77, the 76, 73, and these decision making points means that above it we are looking to be a buyer or to do nothing, but we're not looking to short. If the dollar yen goes above 76.37, we're either going to be a buyers of it or we're going to do nothing. And if it's below the 76.37, we're going to be sellers or we're going to do nothing. At the same time, we are going to place these lines, which are our decision making points, on both the long-term chart and the short-term chart. So the 76.37 here, I'm also going to set it on my intraday chart, and that means when I am trading now, this is my plan, this is my trade plan. So I save these charts, and coming into Monday, whenever these lines will remain on my chart, so whenever it gets above the 76.37, then I'm going to make my trading decision, and basically either I'm going to get out of the trade or I'm going to. And therefore, when you plot your lines on your daily chart and have them also correspondent on your intraday, then you have the ability to make a fast and a quick decision with regards to your trade and your open position. The other thing that you need to do is make sure that you have your platform like the way I have mine here. You have a daily chart and you have an intraday chart right next. I mean, you don't need to have a radar screen if you don't have the radar screen, but you need a daily chart right next to the intraday chart. The reason is the daily chart is going to keep you honest with regards to the direction of the trade. So in this case, if I look at the daily chart of the dollar yen, it's below the 76.37. So right now my decisions is either to be short or to do nothing. So if I'm going to go to the smaller time frame to identify my setting, I'm looking here for a short, and of course the 76.73 is going to be my stop, and therefore it's within an instant that I will have my trade plan and I will know what I'm going to do. Okay, so that's a short summary of how you can take the information that we're going to put on the radar screen and on our plan so that you can use it. We have on our radar screen, basically we try to identify 6 points: a long point, which means a buying point; a structure long, which means a trend change to the upside point, which is a very strong buy; and we also pick our stop for our long position. On the short side, we create a point where we are going to go short below it. We also identify a structural short point, which is a very strong shorting point, a trend change to the downside, and of course when we take a position, we identify our stop on the trade. Okay, so if you can populate this also on your radar screen, or if you have a quote page, that will help you with your trades. Right, so now let's go to the way we also continue our trades. We identify the strongest currency for the last week and the one with the strongest close, so that these are the ones we want to be buyers of, and we also identify the weakest currencies, and these are the ones we want to sell. And then we try to combine the strongest with the strong and the weakest with the weak, like this here. Anyway, right, so let's first start with the US dollar. we had quite an interesting Friday. The dollar right now, I mean, if you look at it technically, looking at this chart, it is still considered in an uptrend. It is still considered in an uptrend, and only when we get a trade or a serious close below the 76.74, we can say that the upward trend for the dollar has now stopped, and we might be getting a turn or a move, a second leg down. We have technically created an initial change of trend to the upside when we broke above the 76.05, which was this, what we call a structural point right there. And that was the beginning of the bull leg. We had 3 consecutive higher highs and 3 consecutive higher lows, which is also an indication of a continuation or a trend to the upside. Then we had this big pullback the last few days. We closed the week at 76.62. We have a structural point which technically is the 76.74, but if you're going to look at the most recent here, which is this low, it is 76.58, which means, and if you look at Friday's low, we did break below that 76.58, and we came back to close at 76.62. If that was a serious break to the downside, and that the dollar is now changing its trend and it's going to continue down, we would have, that close is actually based after that break is considered a good close, because we did not have this kind of capitulation. See, when it breaks the 76.75, look at this capitulation. Look at this capitulation, 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 This is the only one, or one of the few, that when we broke the 76, we did not get a break. So yes, I am negative on the dollar. Yes, I will be short the dollar when it takes the low, and my stop is technically going to be above the structure point, which is the 76.74. I'm also going to look at the other pairs. So one of the interesting pairs is the euro, and as we have been discussing for quite some time, this is what we call the diamond, and it's quite a negative formation. We broke through that, and we have come back, and this actually is the 138.11 based on the index. On the spot, it is 138.36. We have been testing it now for the last week. We closed above that structural point, and what that means is that we possibly going to get a short covering rally in the euro as long as it stays above the 138.11. So I'm looking for a short covering rally in the euro, and I am going to be short the euro if it trades below the 138.11. There is something that is kind of fishy, and I just gonna lead you there, but I want you to see what basically we trade what we see. As long as it's above the 138.11, I'm looking to be a buyer of the euro. If you look at the Aussie, again, we traded above the structural point of 101.64. We rallied to put a high on Friday of 103.14, and we closed the week at 102.65. Now take a look at this point here. We broke the 101.64, And for 5 days, 6 days, we did not get any follow through to the upside. If the prices come above a structure point and it closes above that structure point, we should have had conviction that the Australian dollar is going to rally to the upside. And what we had now, we broke above the structure. The next day we sold below the structure. The third day we couldn't even close above the structure. The fourth day we had a move up and then we failed. And right now we're having this going nowhere situation for the last 5 days. And if you look at this, this is pretty much identical to the euro. Okay, and if I look at the, so what I'm trying to say is, yes, we had this big sell-off in the US dollar, but we don't have any confirmations. I mean, this should have been flying up into the sky up here around 142. The euro should have gone somewhere around here, and the same thing with the Australian dollar. It should be flying up there. It should be flying. In reality, what we have now on the Australian dollar is actually a sell signal. That close below at 102 is actually a sell signal, because we actually failed to close above the previous weekly high. We actually did go above the previous weekly high, and we just came back and we closed right below that weekly high. The weekly high is 102.70. We closed at 102.65. So we actually came back and we were unable to sustain that positive close that we had above the previous week high in the on the Aussie dollar. The same thing with the euro, and you can see it right there, just closing above the 138.11. If you look at the Japanese yen, which also is very, very interesting, let me put a clean chart for you. You can see that we have, again, this is a very similar pattern to what we had in the euro, which is basically a diamond, but in this case we had a break to the upside. And if this is a diamond, and instead of breaking to the down, a diamond is a trend changing pattern, and instead of breaking to the downside, we actually broke to the upside. That move here, that move on Friday, should have led to a major move to the upside. We should have had at least, that would be the foundation now of a new bull leg. When you break out of a diamond, either to the upside or to the downside, you're looking for a massive move to follow. And you can see that, again, I'm just going back and forth because I want you to see what I'm talking about. If you look at the euro, when it broke the diamond from the euro, this is again the diamond. Look at the massive capitulation that we had here right upon the break. So if it breaks to the upside, we should be looking for a massive move in the yen to the upside, and what we got is actually that move on Friday is actually a sell signal, believe it or not, because this was our prior momentum high at 132.01. On Friday we broke above the 132.01 and we went all the way up to 132.16, and then we sold off, closing below the the 132.01 and also closing below that prior momentum high, which is 131.58, which is the internal peak of the diamond. We actually did close below that. What that says to me is that there isn't that power that is coming in that move that happened on Friday. That move that happened on Friday we don't have the confirmations in it that this is really a bona fide move to the upside. We need additional confirmation because none of the breakouts that we had either in the yen, nor in the Australian, nor in the euro have actually gave us a close that would substantiate that breakout. The only one that gave us some decent close was the British pound. And if you remember, let me put this other chart because this has our chart. If you remember, we had a number of 157.63. That was the breakout point, and this is a very, very good close. This is a technically strong close because we came back above the structure point. We had a strong close. The following day we had a push down, but we returned back. We took the previous daily high. We are above the structure point, and we had a very good close. So the bias now is that so far this looks to be the strongest currency so far, the British pound, believe it or not. And last but not least is the Swiss franc. We're going to do the Canadian also. That is, I mean, this is still in a serious bear market. All what we had is a couple of weeks of a bounce to the upside, a little bit of profit taking or short covering. Nothing to write home about. And if it comes and it trades below the 111.15, which is about 15 pips away from now, then we should be looking for continuation for the Swiss franc on the downside. Last but not least is the Canadian, and this is the weakest of them all. With all the breakouts that we had in the Aussie, the breakout that we had in the yen, the breakout we had in the euro, all those breakouts that gave us a technical break above a structure point, this is the one that has failed to do that. And even by looking at this close on Friday, closing at 98.93, this is actually a sell signal because we were able to stay above the 99.01. So we just poked above that and we couldn't follow through to the upside, and we turned around and came back. So having said that, in order to decide our strengths and weaknesses, so the strongest currency so far this week, based upon the closing, is actually the British pound. So as of now, the one that has a good technical close is the British pound. The Australian has given me a sell signal, so I'm just going to be slightly neutral to positive on the Aussie. The euro is also similar to the Aussie, slightly positive. It closed above, so we're just going to be slightly positive on it, but we're not really gung-ho on buying the euro. And the yen is now giving us a sell signal, so that's a negative. The yen is a sell signal, and the weakest of them all is the Canadian. The dollar is kind of neutral. So my choices now are going to be, we're going to be looking at buying the pound, shorting the CAD. We can buy the pound and sell the Aussie. We might also be looking at the pound yen. We are going to be looking at the dollar yen. We're looking at the dollar CAD and the dollar Aussie. And again, we're going to be looking at going short the euro on a break below the structure, which is the 138.36. Now, a couple of things that we need to look at because they give us a sense of the market. We're going to look at the S&P, and we closed the week at 12.35. That is a very strong close, and that indicates that we are going to have continuation to the upside. And therefore, if I have that, I'm looking also at the Nasdaq. We also have in the Nasdaq a good close, but not as strong as the one we have in the S&P. The Dow Jones has an excellent close. So if I'm having a big push coming into the stock indices, in the US stock indices, this should support the US dollar. Because if you want to buy any of the components of all in the stock market, in the US stock market, the only way you're going to buy these equities is by actually using the US dollar. And that increase and very strong closes in the dollar, the euro, in the Dow Jones and the S&P would be an indication that what we have seen now, all those late day sell signals that we have in the Australian dollar, in the euro dollar, and in the are all beginning of a hint that now we might get now the move to the downside in the euro and in the Australian dollar are now should resume, or we might get our sell. As I said, this is a sell signal right there, and we have now a break below the 101.64. We should be getting a bigger capitulation. So our choice now would be like this. Again, these are the ones that we're going to be looking at. Primarily, we're looking at the pound, the British pound. We're looking to be buyers of the British pound, and we're going to be looking at selling the yen against it, selling the CAD, and then selling. So the first is selling the yen, second selling the CAD, then the Aussie and the euro, and by then we get to the dollar. We're going to be looking at the dollar yen, the dollar CAD, and of course the dollar Aussie and the dollar Swiss. So basically we're looking at being dollar buyers and pound buyers and sellers of the other, which is the first one, the weakest is the Canadian, followed by the yen, and then the Australian and the euro. Okay, so let me save this, and then we're going to